This week, we've got three key topics to discuss. The first is the UK budget. The second is what's happened with announcements from European central banks. And the third is what's happened in markets. Firstly, if we think about the budget, there was positive news both for companies and for investors. From companies' perspective, they'll see their rates of corporation tax fall to 17% by 2020. In addition, for long-term external investors, there's been an extension of entrepreneurs' relief. And finally, from a personal investor's point of view, what we saw was the reduction of capital gains tax from 28% to 20% for higher rate taxpayers and from 18% to 10% for basic rate taxpayers. However, this is for investments in companies rather than for property where rates of capital gains tax remain unchanged. Secondly, it's been a very busy week for central banks. We've had the US Federal Reserve announce that probably in 2016, there'll only be 2 further rate rises rather than the 3 to 4 that were previously expected. The European Central Bank has announced that it will continue to buy credit. This has been good for credit markets and in particular financial credit, where we've been increasing exposure in clients' portfolios. In addition, the UK Bank of England has announced that for the meantime, it won't raise rates. So thirdly, markets have broadly taken the UK budget and central bank announcements positively. This has been good for risk assets to which our clients' portfolios are exposed and to financial credit, which we've already discussed. We do, however, expect continued volatility in markets due to issues like Brexit and the US presidential election.